Hi, my name is Chris Hatten, and I want to introduce you to PKF Advisory, LLC. PKF Advisory is a group of firms in the major cities in the United States. This video series is going to introduce you to people and services that will help your business reach the next level and help you solve the next problem you have in your business.
So, we talk about transaction topics quite frequently here, and one thing that's come up in our internal conversations is the transaction life cycle. Can you tell our viewers kind of what that is and what that means for a business?
Internally, how we view that is once somebody's actually made the commitment to go through a transaction, that's kind of the starting point of what we call the life cycle. And so the goal with that is to ensure a successful transaction at the highest price, ideally. And then providing the seller with the realistic value of what their potential exit could look like. And so we have 4 steps within there. The first one being what we call pre-QV work. And that could entail a couple different things, and just to, hit on a few highlights would be a financial house in order is number one. We've talked about that in past videos. The other one would be getting your back office in order. That's more so the administrative type of stuff. Tax returns, legal docs, that kind of stuff, making sure that all that stuff is handy versus having to go out
in 8 different places.
Exactly. Yeah. And you've had some businesses that haven't touched those things for years, and so now they've got to go and pull it all together. So something within that could also be if you're a manufacturing company and you have inventory, you want to make sure that a lot of that stuff is still in sellable condition. You don't have something that's dated, needs to be written off, removed altogether. Another one might be the costing of your inventory. Is it being done in accordance with GAAP, or is it consistently applied in some other manner that somebody could get to? Sales is a huge one.
Sure.
Do you have a good sales cutoff process? Are you recognizing revenue when it should be in accordance with GAAP? Again, would be helpful to going through a transaction process. And then also, what we've talked about in the past is, are there levers you can throw? And what I mean by that is there operational changes that you could make that are going to increase your value by the time you start doing some of the stuff and you ultimately transact? Something simple to look at would be benchmarking yourself against the competition. The information is out there, and so you could kind of go out there and see how you stack up against your competition. And if you're deficient in an area, is that something that you can tweak quickly to make sure that you're at least on the upward trajectory, I would say,
Sure.
going into a transaction versus having these outlier pockets identified. The second step is the sell-side QOV, which we've talked about in past videos. That is where you assess the company's operations, particularly on the revenue expense side, earnings, as well as working capital. And there's a bunch of other areas, but those are the key areas that we would touch on a sell-side QOV. The upside to that is that it's an unbiased assessment. We want to help out the company as far as getting across the goal line, but we also have our reputation to look
Sure.
out for, so we're not going to sit there and put in sell-side QOV adjustments that we can't substantiate ourselves. But the other upside to that is that it adds to the seller's credibility. If a buyer sees that they've actually gone through the lengths of going through a sell-side QOV, the cost, they're going to know that they're committed to the process and more likely to get involved with the transaction with that seller than somebody else. The third one would be due diligence. And sometimes we use those terms interchangeably, QOV and due diligence. But, quality of earnings, obviously there's numbers involved. And so then I look at it a little bit different from, due diligence, the non-financial aspects. So is there an IT component to it? Is there HR? Is there potentially legal stuff that we have to take a look at as part of getting the company ready for business? Another example might be, operationally with your employees. Do you have some key employees that if you're going through a transaction, you want to make sure that they're locked up in some form or fashion, whether it's retention bonuses, incentives, that kind of stuff, so that if they were to leave, it doesn't potentially sabotage your deal. But then also you could potentially have underperforming individuals that you didn't want to let go, they've been around a while, that kind of stuff, but maybe now's the time to sit there and go ahead and pull that lever. Then another thing to keep an eye out for would be tax. And tax is going to sit there and have various touches throughout the transaction
Sure.
life cycle. But this one, I would say, is there some type of assessment that needs to be done? Have you been operating in other states, other countries potentially, maybe where you haven't been filing the returns that you should have, or do you have employees over there that you'd have payroll obligations and returns to file as well? And so anytime you operate outside your home state, your risk goes up accordingly. And so you want to make sure that you've been covering your bases in those areas as well. And then the last step that we say is, which is probably one of the more important ones, is just the structuring and modeling that goes into it.
Right.
By this point, you should have your team set up, and we've talked about those individuals before. It's your investment bank, your M&A attorney, not your corporate attorney, but your M&A attorney, and then your tax advisors to help out with that aspect of it. And so what their goal is to sit there and help you identify the best and most efficient way to go through a transaction. A lot of times you always hear is like, well, was it an asset sale or a stock sale? And that's what they're talking about as far as the modeling of it. There are going to be a lot of tax and legal implications, but there's also accounting stuff. And so that's why you want to make sure that you have a good team of accountants working with you as well. During this phase, because you've already gone through the sell-side QOV, you should have a pretty good EBITDA number for the past several reporting periods. It's going to give you a range of where you should transact at, just because the IB is going to have a lot of other benchmarks to go off as well. And then most importantly, you're going to have an idea as to what you're actually going to take home at the end of the day. So these are the areas where we can assist. Your other advisors are going to be running their process parallel to us, and so there's going to be a lot of overlap or working with them to make sure that we're all on the same page. But the goal is to ultimately help the seller achieve their desired result, which is a successful transaction selling of their business.
And how long does this life cycle usually take? And I'm suspecting the answer is it depends.
Yeah, it's hard to give you a hard and fast number, because the earlier you can actually start going through some of this process, the more opportunity you have to throw some of those levers, because we've talked about how often or how early do you want to start working with a company. And a lot of people say a year or more, but that's not a hard and fast rule. If somebody's ready to transact, we can jump in and move as fast as they need to.